All right, everybody, welcome. Good morning. Happy Monday. Hope you are doing very well. Wanted to do another quick episode revisiting the Bitcoin pricing, trend lines, exponential versus power, but also layering in stock to flow, the very famous stock to flow model, and just try to reiterate that regardless of the model, it all depends on the coefficients that you use, and simpler is better. Definitely keeping it simple is the way to go, and that's what I'm always trying to do. I think that there are some interesting things we can learn from stock to flow, but mostly, and I'll try to illustrate that here in this video, mostly what we can learn is that it's a model that mixes two different types of curves. First is an exponential curve and assets that grow exponentially, with another asset, Bitcoin, which grows in power. Okay? So, having said that, let's go ahead and look. Sorry, I got so many windows here. Let's go ahead and look at some charts. One second. All right. So this is the 2020 stock to flow model. Again, it's based on what he calls the cross asset model, and it is a power curve. Okay, so it's a straight line on log scale. Okay, so you go down here, he's putting Bitcoin on. Sorry, it's a straight line on log scale. Should be clear. Power curve is a straight line on log scale. All right, so you finally get to here, and you can see basically the 2020 model is 4 points. Okay, so it's this first cluster in the early days of Bitcoin. This is simply the stock to flow of early value of Bitcoin versus early stock to flow multiples, which are low. Then you have this next level, next level, all the way up to 2020. Then he has gold and silver. Okay, so again, the problem with stock to flow, the reason that it makes it a little bit ham-fisted, I've talked about it before. There's multiple problems, but the main problem is that Bitcoin is power. Okay, Bitcoin is power. All these clusters clearly move in a straight line on log. They have a linear relationship on log. But he only shows two stock to flow models for both silver and gold. All right. And the main problem is that silver and gold are not growing in power. Silver and gold are growing exponentially. Okay, so as the value of silver grows, it doesn't move up and to the right on this line. It just moves straight up. Same with gold. As the value of gold moves, stock to flow, it's only going to move straight up. All right, because the stock to flow of gold and silver generally does not change. All right, so wanted to show that. I've showed this in a few different ways, but here I'll put in, these are some monthly stock to flow values of Bitcoin. I'm just going to put annual stock to flow values for gold, silver, and Bitcoin over the last 16 years actually, okay, from 2009 to 2024. Okay, so Bitcoin obviously starts at the stock to flow of 0. It's got actually no supply, and then it grows very, very quickly. So the stock can double, in a year or less, even at the beginning. And then, of course, now we're above 90 on the stock to flow as of last year. And we're moving towards over 120 on the stock to flow. Actually, as of this halving, we'll finish it in April. So that's what I'm going to show you. But again, it's not just Bitcoin. All right, I'm going to show the annual stock to flow values in reality for silver and gold. That's going to show us, I think, the pitfalls of this model. Okay, so here it comes. It's not a great chart. My cross asset models of my own or my scatter plots aren't great for visualizing. I haven't found a great way to do it yet other than my time scale charts. But anyway, stick with me here. So you can see there's actually a gold model right here under my picture. Let's just take it off. Let's take off my ugly mug. It's gonna be easier. All right, it's gonna be easier. Okay. What do we got now? Got the same thing. We got gold, silver, Bitcoin. All right, so I'll take off take off Bitcoin. Okay, what actually happens on log? And actually, this is I kept it linear on the y-axis just because it's harder to see otherwise. But what you can see here, all right, this is actual stock to flows and actual changes in value for gold and silver. Let's start with the obvious one. It's gold. What's the stock to flow of gold going back to 2009? 55x. All right, let's see what this next dot is. 2010, 52x. 2015, 47x. This one's 2014, 47x. 2016, 46x. 2018, 45x. But notice the value, the market cap of available gold. What's it doing? It's moving up. And it's moving straight up. Why is it moving straight up? Of course, because it's exponential. On exponential trend lines, the stock to flow does not move. And gold and silver are exponential assets. So as you can see, as we move through the years, the stock to flow is basically staying the same. And the value moves up to where we get to 2024, 51x, all right around 50 here. This is available gold. All right, so this does not include industrial gold. Around 50x, and now we have a market cap of gold of $14 trillion. And by the way, these are averages throughout the year. Averages, taking monthly averages. So very smooth, rolled figure. Hi, Francisco and Five. Good morning. So here's gold. Now look at silver. Silver's even more interesting. Silver doesn't even move. Not only does the stock to flow not move, the value also doesn't move for silver. It's just the nature of the market. All right, the price has been relatively flat to down for 15 years. All right, it got up to $55 an ounce in 2011. I'm not sure if I can even find it. Oh, there it is. All right, so there at that point, yeah, it's at the upper echelon of this ball of stock to flow and market cap data here. 35x stock to flow, $935 billion silver market cap. Okay, so about $1 trillion market, and that hasn't really changed as we've gone sideways with silver price over the last 15, 16 years. Okay, so what's the point? The point is these are exponential assets. One of them, the point is for sure, the stock to flow does not move through time. Okay, it's roughly the same. With available silver, you're roughly in your early low 30s, low 30x stock to flow. And for gold, you're about 50x, okay? And then for the value, okay, gold does improve. We can observe over the last 16 years that gold improves, the market cap improves, all right? But the stock to flow doesn't move. So these are if you look at it on a scatter plot, all right, and this wouldn't matter on log, but I just for visualization, I keep it. This is actually linear log. Gold to silver moves up, just moves straight up. And sorry, gold stock to flow moves straight up, gold value moves straight up, and silver doesn't change. So that's how it actually looks like. All right, now let's put in Bitcoin. Let's look at the annual stock to flows for Bitcoin. All right, putting that in green. There can be green bubbles here. And there we go. We can see now in Bitcoin from the early days, we're at a 2x stock to flow here. Actually, start from 2011. There was no value I could attach to Bitcoin for 2010, 2009, but the stock to flow would even be lower. It would be at 0 and 0, basically. I could have attached it, but it doesn't show up. Zero values aren't showing up. So 2011, 2012, 3x, stock to flow increases over time. 7x, 2013. All right, it increases. So here we can notice now, Bitcoin is an asset where over time, the stock to flow increases and the value increases. Okay. And I think even for emphasis, I did year end actually for Bitcoin. It's not year average, but year end. So we get to 90x stock to flow by the end of 2024, $1.8 trillion market cap. So you see now, these are two different asset classes, completely two different asset classes. Gold and silver, stock to flow stays the same and moves up in value. All right. Bitcoin, stock to flow moves to the right, and then the value of the network also moves up. All right. So you have this clearly differing relationship between the Bitcoin system and the system of gold and silver. So that is the biggest issue with stock to flow. If we go back to the cross asset model, we can see clearly this up and to the right movement of Bitcoin on Plan B's stock to flow model, but only 2 points for gold and silver, just 2. All right, so he's just kind of cherry picking and fitting them to the curve. And we see what they are. He's got 33, which is lower. This is an all-time value, not available value, which in my view is closer to 40. Oh, sorry, not 40. Low 30s is okay, actually, for available as well. Low 30s is okay for available for silver. And closer to 58, this is what I want to say. For silver, he's putting closer to 60, but that's an all-time value. That's not removing industrial. If you want to look at available gold, investable gold, you should remove industrial from gold as well. That's why you get something that's closer to 50 in my models. Okay. So 50 for gold, low 30s for silver. Point is, you have 3 different things happening if you actually plot them out over time. Gold stock to flow stays the same, the value moves up. Silver stock to flow stays the same, the value barely doesn't change. And Bitcoin stock to flow increases and the value moves up. So how would we draw a line here, to connect the dots? Because drawing the line on the scatter plot, that's all that it comes down to. That's all that it means to analyze this stuff. So if I go, I hope that, my stream was coming good there. I'm going to switch my screen yet again. Okay. If I go to here, I got another scatter plot just because this is very simple in Google Sheets. It's the same data I just showed you, but it's now in log. Okay. So here's all the silver data. This is silver data right here. Here's the gold data. Okay. But it's log. It's harder to see. That's why I use that other program, whatever. It's the same thing you just looked at. You can still draw a line through it, but clearly the line going through the Bitcoin stock to flows is better than the gold and silver, which, these are trillions of dollars of difference from the line. Okay. The lowest was maybe here at 55x when gold was a $4 trillion asset, right? Like 10, 15 years ago. Compared to now, stock flow is 51x for gold, and gold is a $14 trillion asset on average over the last year. So it doesn't fit that well. And what it comes down to is you get a power curve, all right? It is a power curve. Stock to flow model is a power curve. You get this very small intercept, and this is the point, this 3.3 on the slope. That's the main point. That's what matters, 3.3. So let's compare it now to, let's go back to the ultimate picture here, and this is the chart. Show all the different things, okay? So here's the price, log scale price, log linear of Bitcoin. Best fitting by far, great R squared, 96%, right on the trend, all right? And the x-axis here is it's the independent variable. It's days from the Genesis block. If you put the formula in for a power curve on Bitcoin's price, the dependent variable is price, all right, the y-axis. The independent variable is time, simply days. So you get this beautiful looking power curve. Now let's go exponential to show you the extreme. All right, I've shown this many times. If you draw an exponential curve on Bitcoin, all right, we can see that it goes crazy pretty quickly. And the price of Bitcoin's system hasn't even touched the exponential curve since May of 2022. Remember, exponential curves are straight lines on log linear. So here's our nice straight line. But let's just go out to, the end of the decade to see the absurdity. Again, I would love it. I'm not saying I wouldn't love Bitcoin to do this, but by December 2030, the power curve statistically shows $556,000 Bitcoin. And the exponential curve shows $41 million Bitcoin. So those are your extremes. Number 1 and 2 are the extremes. And, obviously everybody knows that I'm in the power curve camp, have been since 2018. It's just more rational. It's more logical. It's a better fitting curve. It's only 86% R squared for the exponential trend, the straight line trend, the dotted line. It's just not as good of a fit for Bitcoin over the next decade. And I mean, again, it's fantastic, like returns. We love it. We get to $1 billion Bitcoin by January 2035. Would be amazing. Okay. So let's look at the various, the various gradations of the two extremes here. Okay. The pure extreme exponential is the dotted line, straight line. The pure extreme price over time is the solid line. But say that we wanted to do this stock to flow power curve. So then you have to envision it. I don't have it. I'm not showing it on the chart. Maybe I'll get a different chart. Instead of days since the Genesis block on the x-axis, the dependent variable becomes the stock to flow itself. Okay? It becomes literally on the axis. I'm going to go back to this chart really quick. It becomes these values. Okay? So like back in 2011, the x-axis for our stock to flow curve is going to be 2x, then 3x, 7, all the way up to 90x now. Okay? And we'll be over 120, 130 by, the end of next year. We are increasing at the moment, if I recall correctly. Or at least by the next halving, 120. Obviously, this number doubles every 4 years. Okay? Yeah, it's going to be 120 actually by June this year. That's true, because we were at something like 60 for 4 years. That's this. Now we'll be over 120. That's right. But we're growing to it at the moment. So at the moment, right now, it's just 90. Anyway, stock to flow becomes, these values become the x-axis in the power curve model. That's what's happening. Okay? So if I go back to this one, let's now put in the most extreme, which everybody knows is not working anymore. That's exactly the cross asset model that I showed you at the beginning with the few Bitcoin stock to flows and just 2 for gold and silver, 1 each. That's this model right there in blue. Okay. Again, doesn't really fit. Doesn't look great at the beginning. Look at how beautiful the power curve number 1 fits compared to number 4, or even number 2, the exponential. All right, so nothing makes sense here at the beginning, whereas the power curve still looks pretty decent. And then here we come very aggressive by 2021. Remember, if anyone was telling you that Bitcoin was going to 300,000 by 2021, that would have been bad advice. And I think that certain people did. Again, never financial advice. And then we're off to the races, basically on an exponential curve. Those are the 2020 Plan B coefficients. Okay. Now let's put in 2019. This one is still a bit better. All right. I'm going to actually take out 2020. We all know that's done. We're off it. It's not exponential curve. I'm taking off 2020. Now we just got 2019. This is the one that's still argued that we could be on it. Okay. Because we kissed it when we had the ETF craze in April of last year. And it's taking off again, okay, because remember, the x-axis is the stock to flow itself. So you're going to get this stair step. It's just what happens. So by this point, May 2025, it's occurring quickly. It's occurring right now. We're going to be over 120 stock to flow for Bitcoin, okay, 120. You just plug that into the formula. You'll get this kind of a stair step. Again, I think it's too aggressive. I'm not going to complain if we're on it, if somehow this happens and we get this mixture of exponential and power. Like the net of all this is a mixture of exponential and power, right? Because we're taking in gold and silver coefficients in our stock to flow model. That's the brass tacks issue. We're taking in gold and silver coefficients in our stock to flow model, which is Bitcoin, which is a power curve. So I'm not going to complain. Of course, we get to this price action, but let's just go out to the end of the decade. What do we got on the 2019 model? $8 million Bitcoin, $8.6 million Bitcoin, whatever you want to call it. That's the 2019 model. That's the original model. That's what he's sort of going back to after 2020 failed, whatever. The point is prediction. The point is prediction. And prediction, I don't mean like betting wise or that you know it's going to be this way. It's just simplicity, charting out mathematically what something is. Again, I'm not a statistician, I'm an applied Bitcoin observer for using statistical models. Simplicity is key. Simplicity is key. And this nice green line that I'm showing you here, the power curve, simply on price, one independent variable, one dependent variable, that has basically been on point since 2016. Okay, it was a little bit higher. If you looked back in time at these days, it would be a steeper power curve. But since 2016, we've basically been at the same levels. It's unbelievable. So I think, this is something to pay attention to. Now, let's model out what I just showed you at the beginning, okay? This is so much harder when I'm doing multi-platform streaming at the moment, and it's harder to change my screens, but go back here. Let's model this out. Let me show you what this looks like now over time. Okay, so where I look at, 16 years of Bitcoin S2Fs, which are clearly power. All right. It's decaying exponential on the emission. All right. It's decaying exponential on the emission. That's true. But the market cap, the price action of Bitcoin is power. All right. And then the actual emission for gold and silver is clearly exponential. It moves up. It moves up as time goes on. Okay. Let's plot this out now. Back on the other chart, going back to it for you here. There we go. I'm going to show you now. I've shown you a few different variations of this, but this is exactly these 16 annual S2Fs for gold, silver, and Bitcoin. For the last 16 years, it is here. So these are our coefficients that we get based on this statistical regression. So more aggressive than his original 2019 model. And then I would tell you no more correct. No more correct. Certainly less correct. Not only less correct because it's more off in the past, but because we're mixing power and exponential ideas here. We're mixing power and exponential functions when we do this stock to flow model. So clearly, let's take off everything. If you just look at this, the model that I just drew, I'm not saying this is a good model, but I just drew it, all the stock to flows. Let's not just look at one, but all the stock to flows for gold, all the stock to flows for silver in the last 16 years. The Bitcoin price hasn't touched it since 2018, as we were coming down from the bull, the top. All right. It did nothing for us as far as prediction in 2022, 2021. Of course, directionally, we can all agree. Directionally, there's no doubt. As the stock to flow of Bitcoin increases, Bitcoin is becoming more scarce. The emission of Bitcoin is becoming less. Bitcoin is number go up technology. We all agree on that directionally. But if you want to ask me, how does this look versus the stair step? Sorry, how does this stair step look versus the beautiful smoothing power curve? Again, you know which camp I'm in. All right. So his 2019 model is still the one that looks closest. All right. But we're going to see very soon how that holds up in this bull run in 2025. Last one. Again, let me just to remind you. All right. Let me go back again to this other page. Okay. Let me just remind you. Let's take off now. Let's take off gold, silver. Let's just look at here. And again, I'm sorry, this doesn't rescale. But let's just look at this now and model how a line would go through here compared to market cap. And again, I'm getting to price, by the way, always by dividing by the expected coins at that time. That's how you do it. So let's model this out. But let's even be more aggressive. Let's not just look at annual, but let's look at continuous rolling every day stock to flows, which we can do. So the most aggressive we can do it, only looking at Bitcoin stock to flow. All right, I'm going to do that now. Let me put that chart back. There we go. We got this dotted red line. Okay, so let's take off these. It's a little bit better, a little bit closer than all of them. And here, okay, it says power on running BTC S2F. I'm simply taking the stock to flow at every single day It's just like you do it for power, by the way. You just cumulatively run all the data, and then the last piece of data you extend. Okay, that's how it works for typical statistical models. I'm doing the same here. Okay. So it's better. And again, it is a power relationship, but it is influenced by exponential emission. That's the key with stock to flow. Rather than just purely running on signal of power price, and it's clearly a power relationship, the green line, with stock to flow, we're letting exponential emission of a declining, a halving emission of Bitcoins coming out every 4 years. We're letting that influence the model. So it's not bad. This one's better. If we don't let gold and silver S2Fs influence this model. Okay, so it's better, looks closer to the Bitcoin reality. But this one's going to take off too. All right. And again, directionally, we could absolutely get here this year, getting to $350 a Bitcoin. We can totally do that. To me, that's in the range of the standard deviations or the percentile bands above the power curve, which is 127,000 here by the end of year end. Totally possible. But it's going to start to take off more and more and more. So directionally, we all agree. No dispute there. But simplicity is better. Power curve, to me, seems better. And that's just what I wanted to show here. 2019 is even more aggressive price-wise than what I did. And why would 2019 work, right? That's only taking Bitcoin value up until 2019, Bitcoin stock to flow up until 2019, whereas my dotted line takes Bitcoin stock to flow all the way till today. So why would we trust the 2019 curve just because it's, the first one that he did? And on top of that, you're you're throwing into the coefficients, the one gold stock to flow and one silver stock to flow from 2019. I don't see the value of that. So if anything, the continuous running, ongoing stock to flow of my red dotted line is better. Still a 96% R squared, by the way. And again, that just means that the price moves around this red line better than it moves around the average with less variance 96% of the time. Absolutely true. Absolutely clear. But, at some point, you just got to use the eye test. You got to use simplicity to see that Bitcoin is really following a power curve. And let's go out again to the end of 2030. Not terrible numbers for any of these. Nobody would be disappointed. The actual power trend on price, $550,000 Bitcoin, 600, it depends, $500,000 to $70,000 Bitcoin by year end, 560,000. Plan B's 2019 model, 8.6 million. And then let's continue it on and just grow stock to flow model normally using every day of data, 2.7 million. Okay. But to show you what it clearly is not doing is growing exponentially. And again, these stock to flow models are influenced by Bitcoin's exponential emission of coins, and they're influenced by gold and silver stock to flow for no reason. Clearly, Bitcoin's not on a straight exponential curve. That would put the price at 40 million by 2030. And I know that it's hard when I say clearly. Obviously, no one knows the future. I don't know the future. Nobody knows the future. I'm talking probabilities, realistically, based on the math. It seems very difficult for me to see $40 million Bitcoin by 2030. But it could always happen. So it's interesting now. We see that, you can layer on a bunch of different models, and at the end of the day, the power curve always remains the most conservative. Always remains the most conservative. We go out to 2050 just for the fun of it. We got, we could be on a full Bitcoin standard here, so this just becomes silly numbers and doesn't matter. But Plan B's 2020 model, $212 trillion per Bitcoin. Thousand million, billion, trillion. Yeah, $212 trillion for Bitcoin in Plan B's 2020 model, $850 billion in the 2019 model. $350 trillion per Bitcoin in the exponential model. You're reading that correctly. 23 million on the power trend itself, number one. And then the red ones, which, you know, whatever, more or less aggressive, still in the trillions of dollars. Actually, the power running on BTC, let's put that up. Let's just take that here. Let's leave exponential on. This one is 45 billion. Not bad. Not bad. But still an order of magnitude, 2 orders of magnitude higher than the power trend itself of $23 million per Bitcoin, which is number one. So when in doubt, stick with power, in my view. I've been tracking it since 2018. Probably have now fully beat a dead horse here with the different comparisons of exponential, power, and stock to flow, as I say, which is power, although exponentially influenced by assets that have nothing to do with Bitcoin, i.e. gold, i.e. silver. Power curve is going to be your most conservative and, in my view, your best bet at the moment. But as always, never financial advice. Just trying to educate here. If you like it, please leave a comment. Subscribe. I really would appreciate subscriptions. My BTC Pay servers in the show notes. Happy to draw charts for you guys, answer any questions you have. That's all I have, though, for this Monday. So take care, guys. Chat soon.